Hi everyone, in this video I will talk about involuntary deductions from employees' paychecks. My main concentration will be on federal tax levies, so let's begin. Involuntary deductions, garnishments. Let's talk about the difference between voluntary and involuntary deductions. We all know that our paychecks are much smaller than our actual earnings. This is because of the voluntary and involuntary deductions. The taxes that are taken away from our paycheck before the net amount is given to us. So what are the voluntary deductions? Voluntary deductions are something that are taken out of the employee's paycheck at his will. And some types of voluntary deductions are charitable contributions, union dues, your health saving account contributions, 401k plans. So the main thing is that these deductions are taken out at employee's will. And the involuntary deductions are the ones that are taken out of the employee's paycheck but not at his will. The employer and the employee has no control over the involuntary deductions. Let's talk about the types of involuntary deductions. Number one are tax levies. Under the tax levies, there could be federal tax levies, state tax levies, and local tax levies. And today's concentration will be on federal tax levies. Type 2 of the garnishment is child support withholding orders. Number 3 are creditor garnishments. 4. Bankruptcy orders. 5. Student loan collections. And 6 is federal agency debt collection. There could be cases when the employer receives multiple orders for one employee, and there is not enough money left in employee's paycheck to honor all of the orders. So the common problem for employers is determining the deduction amounts when several orders for involuntary deductions are received against employees' wages. Part of the employee's paycheck is exempt from deductions by law, meaning that if the employee's paycheck is below exempt amount, no deduction should come out. There is a money that employees must take home to make his living, and that is the exempt amount by law. So if there is not enough pay left on employees' wages after any exempt amount have been taken into consideration to pay all the orders, then the employer must decide which orders should be deducted first. And he cannot decide at his own will randomly that he will pick up one order and start deducting money out of that. Some types of garnishments have priority over other garnishments by law. The employer has to go by priority set by law. Now we will discuss each type of involuntary deduction and also go over the priority in relation to other deductions. Federal tax levies. When the employee get tax levy order, employees who fail to timely pay their taxes may become subject to federal, state, and local tax levy after other collection efforts have been exhausted. The levy requires the employer to deduct the amount owed from his wages and remit to the proper agency. It is the responsibility of the employer, that is the garnishee, to determine how much of employees' wages are subject to levy and employer should consider any other claims that must be given priority over the levy. Federal tax levy. This is accomplished by garnishing or attaching an employee's wages to the extent they are not exempt from levy. IRS sends the Form 668W, where W stands for withhold, whenever the federal tax levy is attached to the employee's wages. So whenever the employer receives the Form 668W for the employee, it means that's the federal tax levy. This form has 6 parts. Part 1 is the employer copy. Part 2 is employee's copy. Part 3 to 4. This is the part that should be completed by the employee and returned back to the employer within 3 days. Now, on this 3 to 4 parts, the information that the employee fills is the filing status and number of dependents. This information is needed to calculate the exempt amount. If the employee does not return this part back to the employer, then the employer will calculate the exempt amount as if the filing status of the employee is married filing separately with one exemption. Important thing to note here is that the employer should not rely on the W-4 info that was given by the employee, because the information on the W-4 form cannot be the actual status of the employee. Part 5 is the employee's copy of employee's tax filing status and dependents information. And Part 6 is the IRS copy. Priority over all other garnishments except child support established before the date of levy. So, if you talk about the priority of federal tax levies, it has priority over all other garnishments except the child support order, if the child support order was established before the date of the levy. So if the child support order was established before the date of levy, then the child support order will have priority over the federal tax levy. This slide shows you the screen from the IRS Publication 1494, and this is for the year 2018. This table is used to calculate the amount that is exempt from levy. This has 4 sections, and the sections are divided based on the filing status. And then there are rows that says daily, weekly, bi-weekly, semi-monthly, monthly. That is the pay period. And then you will see the number of exemptions. So that's the information that is required from the employee to calculate the exempt amount from levy. So what information is needed for calculating the exempt amount? It is the pay frequency. You will collect the information that is given on part 3 and 4 of the form 668W that the employee returns back to you. You will need the 1494 publication, and you will calculate the take-home pay, that is the net pay. Exempt amount is deducted from the take-home pay to find out the amount available for levy. This slide shows how to calculate the amount that is available for the levy. So you have your net amount, that is your take-home pay, and you deduct the exempt amount. That is the amount that is left for the levy. In order to calculate the net amount, you will take your gross earnings. You will deduct the federal, state, and local taxes. Then you will deduct the payroll taxes, the Social Security, and Medicare. You will deduct all the involuntary and voluntary deductions that were in effect before this tax levy was received. Also deduct the increases in pre-existing deductions that is beyond the employee's control. You will deduct the deductions made as a condition of employment, and then you will reach the amount that is called the net pay, that is the take-home pay. Out of that net amount, you will deduct the exempt amount that you calculated based on the information that the employee gave you and also by referring to the tables. So after deducting that exempt amount, whatever is left, that is the amount that is available to honor the levy. Let's do one example with the actual figures, and then you will know how to calculate the amount. Let's go over one example. So here I have Jenna, who receives a bi-weekly paycheck. Information on part 3 to 4 of the form 668WR that she files as married filing jointly, and she has 3 exemptions. Her gross earnings are $1,500 bi-weekly. So her federal tax is $140, her Social Security is $86, Medicare $20.3, state taxes that come out are $45, her 401k contributions are $75, health insurance $100, and based on all this information, we will calculate her net pay or the take-home pay. So we see that 401k contributions, health insurance are the voluntary deductions, and the federal tax, Social Security, Medicare, and state tax are deductions that are taken by law. So we deduct all those amounts from the gross earnings and we come up to the take-home pay, which is $1,032.90. Out of that, we are going to deduct the exempt amount. Here you see that the exempt amount is $978.85. Let me show you how that exempt amount was drawn. So let's go back on the tables. We know that her check is bi-weekly and married filing jointly and 3 exemptions. Keeping that information in mind, we'll go back on the table and we will see under married filing jointly, which is the first right top part of the table, and under that we will see bi-weekly 3 exemptions, and you see the amount $978.85. So this is the amount that we brought in here, and we deduct that amount from the take-home pay, and the money that we are left is $54.05. This is the amount that can be taken from her paycheck every week to honor that levy. When to stop withholding the federal tax levy? So do not stop withholding if the amount of the levy is completed. You keep withholding, you means the employer keeps withholding until the employer receives the form 668D, where D means discharge, means the employee is discharged of the levy. So until the employer receives that form, the employer has a responsibility of keep withholding. There could be the case that the employee gets terminated and you have not received the 668D from the IRS yet. So, and the employer pays severance pay or final PTO to the employee. Then from that severance and the final PTO, the tax levy should be withheld. There are penalties for not withholding. Employers failing to withhold and pay over amounts not exempt from levy after receiving the Form 668W are liable for full amount required to be withheld, plus the interest from the wage payment date. In addition, the employer is also liable for the penalty equal to 50% of amount recoverable by IRS after the failure to withhold and remit. So that's all in this video, and my next video will be on child support orders. So keep watching. Bye for now.